Bless squad, what's going on, y'all, man? It's your boy, Blessed Applesauce, to bless y'all with another video here on Blessed to Invest. And today I want to make this video. It's going to be the top 5 strategies that you can use as a trader to start making money. I was looking through my catalog, and a couple people, some of my subscribers were asking me questions like, what strategy should I use? When I'm looking at stocks, what should I do? What system should I go for? So I decided to make this video to give you all the best strategies, the most common strategies that you can use today, and they will immediately change the way you look at trading. But before I give you the strategies, make sure you spam the like button, sub down below for more content like this, and also leave comments and stuff because I do read them and I will make videos based on the questions y'all ask. So thank you to the subscribers that were asking for me to make this video. So without further ado, let's get into it. First things first, the best strategy, the first strategy that I ever learned was the breakout strategy. The breakout strategy is an excellent strategy to trade. The reason why I say that is because it's very simple. A lot of beginners can understand where a support and resistance line is. They can understand where these trend lines are at, and they can understand, okay, this is a clean break here. And I want to give you all an example of one particular stock that has a lot of breakout patterns, so y'all can get familiar with it and learn how to identify a breakout. So before figuring out what a breakout is, you need to draw your support and resistance lines. So this is Tesla. We're going to draw our support and resistance lines. Another support resistance line here, another support and resistance line here, another one right here. We got another one right here. Another one right here. And if you're not familiar with how this is done, go check out my support and resistance video. But basically what I'm doing, I'm calling out the key levels, the tops and bottoms where this stock is topping out at. So like, for example, here is a big reversal, and it comes back down. This one held, so pops back up. So you're just trying to find where the levels where this particular stock pivots. This is a great example right here, how it bounced right here, bounced right here, bounced right here. And that is a key support line, key trend line, because it's holding that level. And in a breakout strategy, all you're doing is identifying where those levels occur, where it does not, it holds. So for example, with this, where you have this trend line, you're identifying the levels where it's holding. So it's holding here, here, here. And then you're waiting for that level to break. You're waiting for price to break above or below that level. For example, here's another example right here. How we have this key resistance level where for some reason it got up here, stalled out, got up here, stalled out, got up here, stalled out, and then it sold off. And then all of a sudden, once it got back to that level, it broke. So that will be your breakout. It's when it's breaking out of a key level, a key range, and the price tends to spike up. There tends to be an aggressive move in volume, as you can see right here, and the price begins to spike up. So what you would do with breakouts, how to trade a breakout, is you want to wait for price to cleanly break above the level. One, you want to make sure there is volume. There needs to be some type of action taking place, because you don't want to get into a situation where you're getting a breakout and trading it and then it fails on you. You want to make sure there's a lot of action here. And then you also want to make sure that there is it's close to the trend line, so it's not aggressively just shooting up. So a bad breakout will be when it immediately shoots up. Let's say it shoots up from, in this scenario, it shoots up from 300 to 320 in a day, and it's super aggressive and a whole bunch of buyers are coming in and there's just no pullback in sight. On a breakout, you want to see kind of a slow build up to the breakout. You don't want it just immediately to break out. You want it to break out, wait there for a little bit, and then off to the races, not just an immediate break. So those are the things you want to look for in a breakout. This is one of the most simplest strategies to trade, and I highly recommend anybody to test out this strategy. Just draw your resistance line, your support lines, wait for the clean break, and then get into your trade. The next one that I want to look at is the cross. You can use a whole bunch of different crosses. They have EMA crosses, SMA crosses, golden crosses, whole bunch of different crosses. But just to keep it simple, these are the two we're working with today. This is the simple moving average. This is the 50 moving average, and this is the 200 moving average. And all you're doing in a crossing strategy is you're waiting for these two particular lines to cross. And when they do, you're going to take your trade. So in this scenario, this will be your moment to take your trade. So we have this level right here. Boom, it just crossed. So you will be going long. You will be going long because the price is above this level. So you go long and you take your trade and you're in for the ride. Same way in reverse. So right here, it crossed again. Boom. So you'll be going short. You take the trade and you ride it down. This is a great system for people that are beginners as well, because a lot of beginners may not understand how to draw out support and resistance line. They may not understand price action as well. And this is a simple way of, okay, this is telling you get in or don't get in. It's not a lot of guesswork in it. You do have to put some type of risk parameters around this system, because you can get into a situation where you're kind of getting chopped up, and you might be losing money if there's too many signals popping up where it crosses a lot. But if you put some quality risk around this system, you can be very profitable and take trades on for a long period of time. So I really recommend this cross system. Find your cross that works for you. Put a stop loss, put some type of risk management around the system, and you can have a very profitable cross strategy. The next one we're going to look at is the oversold pattern. And this one is going to be coming from your indicators. When I first got into trading, this is one of the first indicators I looked at, the RSI indicator. And how you read this particular indicator is red means it's overbought, blue means it's oversold. And what does that mean? If it's overbought, that means people have aggressively been buying it, and chances are it is going to come back down. It's giving you an alert that this thing is really high. It has been purchased a lot, and it's probably going to come down. It's not perfect, but it tends to work. And in reverse, this oversold, it means it's really low and people have been selling this off aggressively. It may be a good time to get in here. And what you can do with this particular system is wait for these signals to appear. Pull out this indicator, and when it turns blue, you can say, okay, this is my potential time to get in. When it turns red, you can say, okay, this is my potential time to go short. And what I would do with this strategy, I would not only use this RSI. What I would do is use it as an indicator for, okay, I want to get into this trade, and then wait for confirmation on this particular stock that you're trading. So for example, let's say you have this level right here, and you have the RSI saying this is a good time to buy. Once it says it's a good time to buy, what I would do is put either an EMA, or I would use a let me put that in there. I would either use this EMA here, or I would use a candlestick system to confirm to me that I want to get into this particular position. So if we're using the EMA, right here is our blue signal where it's saying it's a good time to buy. And then the confirmation to actually get into the trade will be when price crosses over this blue line. So it crossed over the EMA, it's holding the EMA, boom, get in. So you would get in on this candle right here, and then you would ride it all the way up. Same signal right here, boom, you have a blue signal where it's saying it's oversold. You wait for price to get over the EMA and start pointing up, and then you get in and ride it up. This almost did it, but same situation. So just wait for your confirmation on this, because you don't want to get into these trades where you buy every blue signal and then it just dumps on you. This is a good example right here where you're buying, you get in, let's say you got in right here, you got in a little too early, and it just keeps on dumping on you. So you want to make sure it gets over the blue line. It's the blue line starting to point up a little bit. It's in the upward direction, showing you that prices started to curve. So use that as a signal for this system. But it's a great system to use the RSI to identify when to get into these trades and create a system, create some risk management around it. Highly recommend this system right here. All right, next we want to look at, this is one of my personal favorites, the range trading system. And what a range trading system is, again, same with the breakout, you're going to need to know how to identify your support and resistance levels. And for this system, it's going to be critical because you're going to be trading in a range. So Netflix last year is a great example of in 2021, 2020 is a great example of what trading in a range is. So as you can see here, this stock was at a high of 564 in this general area and at a low of 468, and it continued to bounce up and down on this level. So it got to the high, dropped to the low, 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 and it kept doing this over and over and over again. And this is what I mean by trading in a range. These stocks are super easy to trade because the patterns are consistent over and over again. And you would think, why are stocks trading like this for so long? And they tend to do this for a long time. I can pull up a lot of different charts. We have Walmart, for example, that has traded in a range for over a year. And it just trades like this every single time. You could just take advantage of it. So let's say you know that the low is right here. Boom, you get in right here at 467. You know to put some risk management. You put your stop loss right underneath there, and then you ride it all the way up to the top around 560. Boom, you just made $100 off of that per share. Do it again as soon as it gets down there, and you can just keep on trading this over and over again until it eventually fails. So you might be able to trade this 5, 6, 7, 8, 9 times. If you want to do it on the long and short side, you can do that as well. So if you want to take this short right here, take it short right here, and then take it long when it gets down to here, you can do that. This is a very great system. This is actually one of my first profitable systems. I remember trading a lot of gold stocks, a lot of oil stocks back in the day when they used to trade in ranges. Really fun, really good system that I recommend anybody to get into, trading in a range. And last but not least, I want to show y'all this very cool system as well. This is going to be called the wave catching system, or just trading the wave, or trading or trend trading. And with this one, you are going to open your EMA up a little bit more. This is currently a 9 EMA, but you're going to open this up to a 20 EMA. So let's open it up. And what you're going to do, all you're going to do is just wait for the stock to bounce on the particular EMA. And the thing about this, you want to make sure that you're trading a stock that is upward trending, or if you're trading short, you want to trade a stock that's downward trending. So there's a couple of ways to figure out if it's an upward trending stock or the downward trending stock. One, you can see that the stock is over the 200 EMA, or you can look at a MACD indicator, or you can look at some type of DMI indicator, or you can look at a whole bunch of different indicators to determine if the stock is trending upward or downward. That's going to have to be determined by you. What indicator you're going to use to figure out, is this an upward trending stock or a downward trending stock? But my personal favorite is using an EMA, because you can see, okay, it's above the EMA, so it's trending upward. And once you identify that it's trading in a particular trend, what you want to do is catch the wave. So we have our 20 EMA here. We just wait for it to pierce below the 20 EMA, and then we want to take our position. So in this scenario, boom, it hit our 20 EMA. We have a nice strong green candle that's showing This is a strong candlestick pattern here showing that there's a lot of bulls available. So we take it long right here after it pierces our EMA. We put a stop loss right underneath our trend line, and then we ride it up. Boom. Same thing right here. It pierced the EMA. You want to hop in. Boom. Ride it up. Again, it pierced the EMA. Put our stop loss right underneath. Boom. Ride it up. And we can do this over and over again as long as the trend continues in our favor. We just want to make sure in the system the trend is in our direction. Of course, you're going to have your losses, but that's why we manage our losses. We manage our risk. For example, let me give you an example where this doesn't work out too well. Yeah, a couple of these, like, it kind of fails a little bit. Like right here, it's a little bouncy, but you just want to make sure you get in when it pierces. You get your confirmation with your candlestick, and then boom, you get in. Like this one didn't do that great. Kind of pierced it a little bit, came up a little bit, but the overall concept is there with this. You're just waiting for it to bounce on the 20 EMA. You get a strong green candle, you put some risk on it, and then all you need to do is win a good 50% of these trades, and you should be just fine. With this system is really fun, especially when you know the overall market is up or down. So right now, when we're in a bear market and everything is falling, this will be a great time to take everything short. So you see how this one is trending down. The overall market is trending down. So if you want to take some short plays on this, boom, get in, ride it all the way down. Boom, get in, ride it all the way down. Boom, get in, ride it all the way down. This is a great opportunity to take advantage of that. And I love the catch the wave trend trading system. So if you have any questions on other strategies that you want to see, let me know down in the comment section down below. And if you have any questions about these particular strategies, if you're unsure how they work, if you're trying to put some framework around them, let me know, and I can answer all those questions down below for you. But that's going to wrap it up. It's been your boy, the top 5 strategies that I love and enjoy. And that's going to wrap it up. It's been your boy, Blessed Applesauce. Stay blessed. And I'll see y'all next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.